Velodyne, the manufacturer of LiDAR sensors, has recently merged with GRAF International, a special purpose acquisition company. Before the merger was completed, the shares were trading as high as $30 per share from the initial $10 per share. But after the merger has completed, the shares have crashed to $13 levels. Why has this crash happened? And what does it mean for the future of the Velodyne stock? In this video, we will take a brief look at the history of the company, look at the merger transaction details, evaluate the bull case and bear case scenario, and try to come up with a valuation for the company. So please try to stay until the end of the video to find out all the details about the Velodyne stock. Hi, I'm Arshad Ahmed, founder of DIYstockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is for information purposes and should not be taken as an investment advice. Please do your due diligence. Velodyne is a Silicon Valley-based LiDAR company. The history of the company is very interesting, so you got to listen to this. David Hall founded Velodyne in 1983 and named it Velodyne Acoustics, which was initially an audio company. Velodyne's experience with laser detection started in 2005 when David Hall and his brother Bruce entered a vehicle in a driverless competition called the DARPA Grand Vehicle Challenge. This experience led them to realize the shortcomings in camera-centric approaches as well as the existing LiDAR technology of that day. The existing LiDAR technology scanned only a single fixed line of sight. They developed a LiDAR technology which produced 1 million data points per second, whereas the then LiDAR systems produced only 5,000 data points per second. In 2016, Velodyne's LiDAR department was spun off from Velodyne Acoustics. And that same year, they announced an investment of $150 million from Ford and Baidu. In 2017, they opened their first mega factory in San Jose, California to speed up production and reduce the cost of LiDAR sensors. Velodyne also has a production facility in Morgan Hill, California and an R&D facility at Alameda, California. Alpha Puck, VelaArray and Velodome are the company's main products. In 2018, the company signed an agreement with Nikon and Veoneer for speeding up mass production and manufacturing. In July 2020, the company announced that it would be merging with GRAF International, a special purpose acquisition company. On September 30th, 2020, the acquisition was completed and the newly combined company became publicly tradable on the NASDAQ under the ticker symbol VLDR. Here is a look at the pro forma valuation of the company. Valuation implies a pro forma enterprise value of $1.6 billion and an equity value of $1.8 billion. Existing Velodyne stockholders will receive 83% of the pro forma equity and $50 million in cash. Fully committed PIPE transaction of $150 million. Transaction will result in approximately $192 million cash to the balance sheet to fund growth. Here is a look at the pro forma equity shareholder structure. Velodyne shareholders get 83.3% stake. SPAC shares 6.6%. PIPE shares 8.7%. Founder shares 1.3%. There is a clause in the contract that Velodyne owners and SPAC founders will be granted additional shares if the stock trades higher than $15 per share for 20 out of 30 trading days, 6 months following the completion of the business transaction. Here's a look at the bull case scenario. Estimated contracted revenue of $800 million through 2024. Since it's contracted revenue, there is some guarantee that the revenue will be realized. 300 plus customers with $570 million of cumulative revenue so far since 2010. So there is some track record for the company so far. There is an opportunity for 60% cumulative revenue growth until 2024. 60% may be a bit exaggerated, but 35 to 40% may be a safe number to consider. Once a company signs a contract to use the Velodyne LiDAR, it gets locked into the system. Since the costs of switching to another LiDAR provider are high, this gives a moat to the business. The barriers to entry in the LiDAR technology are high. This prevents competition from poorly funded companies. The company is backed by investors, including and not limited to Ford and Baidu. Here is a look at the bear case scenario. Since many of the markets in which Velodyne competes are new and rapidly evolving, it becomes very difficult to project long-term end customer adoption rates and demand for Velodyne's products. Hence, many of the revenue projections may not actually result in tangible revenues. The company is burning about $50 million cash per year. Since it has $192 million cash on the balance sheet, that gives the company 4 years to turn in a profit until it may need external financing. Velodyne's LiDAR sensors are costly and come in at about $75,000 per sensor. The newer camera sensors that Tesla's autopilot uses are more cheaper. Now here is something very important. The shares that are held by the PIPE investors are freely tradable without any lock-in periods. That may explain some of the pressure on the stock price with all the selling happening in the market right now. Also, the future market conditions may not be conducive for Velodyne's products, especially if the pandemic lingers for a longer time. And here comes the conclusion and valuation. Looking at the current stock price, it does look that the stock is still overvalued even at the current price levels. And the reason is that the future growth has already been priced into the stock price. Looking at the market volatility right now, there may be a further chance of contraction of the share price. I would say if you can get in at an enterprise valuation of $1 billion, which would be about $6 to $7 per share, then you would have upside in the future. I have analyzed the GMHI stock, Luminar Technologies, and that video shall appear here on the end screen, and I hope to see you in that video.